Okay, let's talk, you and me, Jennifer. So I don't remember who exactly I was working with doing an assumption, and we were able to call their client because they were getting ready to list their property, and the seller was really concerned with someone assuming his loan. And he did have a VA loan. We just started researching and getting more information out. So when we did, we came across all of this info because I know things always change. Like once you think you know something and you're like, oh shoot, it changed. I thought I would just put this, document together for everybody, and we can put it on even just the website, but there's different rules for different types of loans. So we're looking at assuming a conventional loan. Most conventional loans can be assumed, but eligibility is going to be it's going to vary between loan terms. What I always tell when you're closing on your loan, the loan documents that you're signing, that like the big fat packet, the deed of trust, that's where it's going to show you like what they're willing to do as far as assumption, if it's allowed or not. So you do want to read that portion. If that's something that you're concerned with, you should always read that.
Can they just call their servicer and ask the bank if they can look into it?
And actually, that's what we did. We had the borrower get on the phone with the vendor, and then it was a realtor and myself, because they don't know what questions to ask, right? I mean, you don't know. So we asked all the right questions, and one of the questions was, if I let another veteran assume my loan, am I still going to be, my entitlement still going to be attached to the loan? And it says the original borrower may retain liability unless released through the substitution of entitlement. Assuming the borrower may need to be a veteran or active duty service member or meet specific credit and income standards. That's what they're using to qualify. But as far as assuming the VA loan, they don't have to leave their entitlement attached to it.
So they keep their entitlement then?
Yeah, as long as they're a veteran and they are assuming the loan, then they can use their own entitlement.
But then what if they're not then?
Then it may possibly be attached. So you really need to get that answer. And that's why, like, when you're making an offer on someone who has a great loan with a great interest rate and you're like, hey, I want to assume that loan, they actually have to give you permission. So they have to give you permission to assume their loan. Did you guys know, I know we're bouncing the VA loans because we started on there. But did you know that you can assume a VA loan and be an investor? You don't even have to live in the property. Isn't that crazy?
That is crazy.
Yeah. So I just recently found that out as I was going through all of the requirements. There's different situations. If we're going to go through the VA part, let me go over a divorce situation. Loan responsibility. The spouse keeping the home is not legally responsible for the mortgage if not on the loan, but the other spouse remains liable unless actions are taken. So if they're getting a divorce and that one of the spouses is not on the loan, they would have to assume the responsibility of the loan.
Well, that makes sense because they're not on the loan.
But if you're getting a divorce and you're entitled to the home, then you're going to have to assume that loan and release the liability from that veteran. If the loan is assumable and approved, the spouse can assume it, meeting credit and income requirements. Just had one deal where we helped them buy their house about 15 years ago. And she was only on title, but she was not on the loan. And the husband passed away. So she had to try and assume the loan. So she was really worried because she was a housewife for many, many years. And now she had to get a job. And she's like, I don't know if they're going to approve me. So I said, you know what? Let's give them a call, tell them what's going on, and go from there. So I helped her make that phone call. And when we spoke to the bank, they had a small, like a very condensed application for her to fill out. It's in 2 pages. They approved her. And she didn't have the best credit, but since she had been there, living there all the years, they assumed that she probably did help make some of those mortgage payments. She was able to assume that loan. So it worked, worked out for her. So like I said, it depends on the type of loan you're getting, or if it was a conventional loan. I can tell you that all conventional loans, they are assumable. The same thing. They just want you to make sure that you can qualify to make the payments, which is reasonable. I don't know how you guys do it, Jennifer. When you're shopping for a property, do you look at county records to see who the owner is and how much they owe? Like, does it show you what their interest rate was sometimes?
No, so that's one thing. I know there's programs out there or platforms that you can pay for a subscription. A lot of wholesalers that will share with you or estimate how much they're like what the interest rate is and their estimated amount and the balance due. But
Mhm.
I personally have not found, I used to pay for PopStream for all that information, but then I canceled that subscription because I was using it as much. The only thing I liked about PopStream was that if you populate the property information, it had all that information. What type of loan it is, what is the estimated balance due, when, the interest rate. With all the realtor stuff that we have, all the free programs that we have through Honolulu Board of Realtors, it doesn't show us any of that.
Wow.
Not those specific details. I don't know if anyone else, or if Linnell, if you found something, or any of the other agents found a program where you can look up that information, but I can't. I don't know where to look it up. Like, we could look up on the MLS, like, what type of loan the property was purchased with, if it was cash, conventional or whatever, but we don't have the details.
So I know Chris uses MLS here in Colorado. We can look at the tax records, and it actually shows when they purchased it, who purchased it, what type of loan they had, and the balance. And the interest rate sometimes, not always. I've been getting this question like more often now, especially because the rates were a little higher, that they wanted to assume it. How do we know if we want to assume it or not? Well, ask your realtor to look up those records, and you can see like what the interest rate was, hopefully, or how much they owe on that property. See if they're willing to allow you to assume that loan.
But the seller has to be willing for you to go through that process and go through that process with you.
Yeah, absolutely. The other thing that's a big deal too is you guys need to know that if you are going to assume, or your borrower is going to assume a loan that exists, their lender no longer has anything to do with your file. You have to go through the bank that actually has the current loan, and then you start working directly with them.
With the servicer, yeah.
So now, if you had your preferred lender or your loan officer was working on a file, they had you pre-approved, they have nothing to do with it. If they help you navigate it, just know that they're not going to get paid for their services. And if they're willing to do it just to help you, because sometimes it's not easy, it's a good thing. I always help all my realtors. If someone even calls me and says, hey, I know that you're the lender on this file, or I see that you were able to help someone assume this loan, will you help us through it and we'll pay you a fee? Even if they don't pay me a fee, I still help them because I know how important it is to be able to, catch that lower rate, especially right now. I mean, we're struggling as it is with the condo questionnaires and, all of the underwriting guidelines that we're faced with. That this is one less obstacle. If we can get them a good rate and help them buy, and I'm all about it. I'll catch the next. So, just know that not everybody's going to help you, but they do have to get approval from the current owner. Then as far as FHA loans, so if you already have an FHA loan and you're purchasing another house and you want to assume that loan, you won't be able to assume another FHA loan. It's like extenuating circumstances, like you're over, I think they changed it. It used to be 50 miles away from that other home, but maybe 100. Or if you're like going through a divorce and one of the spouses is staying there, then you're allowed to get another FHA loan. So there has to be a reason why they should approve a second FHA loan for you. And they're doing the same thing. They're looking at your debt to income ratio, your credit scores, all of your credit criteria that we would look at in a normal loan approval as well. So here's where it says subsequent FHA loans. Those with an existing FHA loan may be eligible for a second one under certain conditions, like proving the second home is a primary residence. It is possible. I would say definitely give it a shot. Don't just assume just because you have an FHA or they have an FHA that you shouldn't ask to assume that loan. But yeah, I think that's the biggest thing right now. I mean, I'm hearing that over and over when we're teaching these first-time home buyers. Every single class, someone is asking about assuming a loan, because I think that's a thing now. It's like
because the interest rate, the interest rate is just lower that way.
Our rates dropped a little bit. I know that's not what we were supposed to talk about today when we're talking about assumptions, but they did drop a little bit. And so I had a question from another realtor asking about hard money loans and non-QMs and what the difference is. So today I got one approved at 6.99. That's a non-QM. It's a bank statement loan. And his credit score was a 680. So it's not like it was a 750 or anything like that. And they were still getting a decent rate with that. So there's still programs out there to help him. He was doing a cash out on his loan as well. So to me, when I looked at that rate, I was like, heck yeah, that's a great rate. Mm-hmm. And there's no prepayment penalties on those, so they can always refinance if they do. We're being told that we should expect them at the end of the year, beginning of the year, but you never know which direction.
I didn't even realize that conventional loans are assumable. I thought it was just FHA and VA loans.
That's the reason we do this, is to clear up some of those misunderstandings, or I thought it was this and I thought you couldn't do that. But
Francis, Hi, do you happen to know how or where we can find a seller's own information, like the interest rate, the estimated balance due?
Not on the public records. I've always asked the
Seller.
agent. Yeah. Unless you have a friend that's a lender, I think then of course we got to use them, right?
How would they find out?
Yeah.
They have access to it, right?
Two others. I mean, I always ask my realtor. So Chris, I always ask him to look it up, and he'll look it at Chris. Can you come in here real quick? Let me ask him what exactly where he finds it. We're looking for, like the type of loan that they had, the purchase price, and their interest rate. Where are you looking? So maybe you can tell Jennifer where to find it. Come in here and say hi.
Hi.
Hi guys. So on your MLS, you have does it say Realist when you log in? MLS is very similar to ours in Colorado.
Yeah.
Split up.
So if you go into Realist and you go into the county, because I know each island has I think its own county.
That's correct.
And then you can put the address in, and then I think it populates by your APN number, your parcel number, something along that line, your tax ID number, your parcel tax. So it populates a little different, but if you get a particular property, about the second or third page down on ours, it lists the sale information and it lists the mortgage information.
They're gonna look it up real quick.
That's correct. It does.
No, yeah, it does.
But it doesn't give you information on what the balance is, the interest rate, and if you refinance. No information about that.
So it doesn't tell you if it's a refi, because ours will tell us if it's a refi. If for some reason, I guess if the tax people are on it and they get the information, sometimes we'll see a note rate on there as well, but not always.
Or what type of loan it is.
It shows us what type of loan, but I want to know what the interest rate is, how long, when does a term expire. I want to know monthly payments. I want to know the balance due. I want all the nitty gritty.
If you reached out to title, they run reports for you like that?
They do have that information.
Then it would just be a lien on their property, and it won't go into the details that I'm looking for. It'll just show first mortgage has this, whatever.
For you, the price, loan amount, what type of loan, the term, and the interest rate on the mortgage.
Do the interest rate too?
Yeah, I think ours do. And then you might have to.
Yeah, because you have a promissory note.
Backwards on the map, depending on how long they've had the property. An idea, kind of a roundabout way to.
Promissory note is filed with the county, along with the trust.
Okay, yeah, no, I think you're right. It's just a matter of clicking.
It's usually like an Excel spreadsheet, and there's just column after column after column.
Yeah, so that means I would have to just go through a bunch of documents to find that information. I'd rather pay a monthly subscription for someone to give me that information.
Yeah. Girl, send it to me and I'll find it for you real quick.
No, I'm not gonna
where
do
to find
that to you.
Like, here you go. Here, I'll send you just that.
No, I not do that to you. But
it's worth it for your client, right? I mean, if you can pick up an interest rate that's a 2.75 versus a 6.75, it's worth a couple of extra minutes that we have to spend trying to help them with it. Even if I'm not doing the loan, but if they help you as a realtor at that purchase.
If you reach out to title, don't they have the criteria, and you could tell them I want something that was purchased 2016 to 2020.
Like a farm list.
And then they will just find out properties that have been purchased or refinanced as soon as they got the rate when it was the lowest at that particular time.
Yeah.
And then it just kind of narrows everything down for you guys.
oh, that's a good strategy too.
Yeah, we used to do farm lists way back in the day. Do you remember that?
Oh,
But
yeah.
they still exist because we always still get offers from our title company.
Yeah, you just hit the paper.
And Jennifer, maybe you can get that list and then send them one of your fabulous, awesome letters. Like, hey, do you want to sell? You can get someone to assume your loan, and it can be a quick transaction.
Oh yeah, because the interest rate is desirable. That's a good idea.
And you know what else? There's no closing. You're not paying those
Really?
$12,000. No, because of the
Oh.
loan.
Yeah.
Wait. There's no closing cost for what?
Assume a loan. I mean, and if you do, it's very minimal. It may be $200 or $300 or $500, but it's not $10,000 to $12,000 because
Why
you're
is that?
Because you're assuming a loan that already exists.
So it's no closing cost in the sense for the buyer with the working with the lender.
Right. For them,
Oh.
if you're taking over someone else's loan, they already paid those closing costs. And you may have to pay for a transfer fee. Like if they have an escrow account and they have $3,000 in there, you may have to refund the seller because that's their money. Like here, replace their money, put yours in and give them theirs. But true closing costs, nope. I think if you have something like $500, that would probably be the maximum amount, if anything, for like a transfer fee. Imagine saving that kind of money because you're not going to close. I mean, have to pay closing costs. That's more money that they can put towards your purchase.
But you just need to have enough capital for the equity then.
So if you're going to look at your county records or get that information and you see that they listed the house for $1 million and they owe, $700,000, so they were going to gain $300,000 from selling them, then the buyer has to come in with those $300,000 and assume the difference is $700,000. So the last one I did, the last assumption I did, it was a veteran selling and he had a 2.7, and there was another veteran that was selling. So that's exactly what he did. He came in $1,000 and assumed the balance on the loan.
So that's the only thing then. The buyer has to have enough money to assume the loan, yet, so he just pays what's due. It doesn't work for someone who only has 5, 10, or 20%.
No, because they have to be able to give them whatever they were going to make on the sale. But I mean, Hawaii, there's a lot of people that have a lot of money, and you guys see that all the time. I'm trying to convince them to buy it cash. I'm like, no, let me do part of your loan. Let's put a house down and buy 2 properties. Don't just do one.
I mean, they could, if there was a lot of equity, the seller could finance the rest if they come up with a structure, right? So you have the first lien, the seller note. Or what if like the buyer buys it and then it was like short promissory note that was like within 3 months I will pay off this amount, and then the new buyer, the new owner, could just get like a HELOC on the property or take that equity out, right? And then cash it out to the seller.
The VA will allow you to get a second mortgage to assume that loan.
Oh, there you go. That's another option.
Oh, wow. That's good.
So that's a good point, Francis. You just reminded me. I was just on a blog on that, and basically what they were saying is that VA does allow it. So if you needed, $200,000, then they can do a second. What I'm not clear on is if they will do like the 100%, because if you're a veteran, you don't need money down. So to me, I would assume or think that VA is going to say, yeah, we're going to give you $300,000 because that's what it would at 100%. So now they have, like if it's 700 plus a 3, it's $1 million. But 100%, because veterans are allowed to do that. I'll confirm if they're willing to do, or they're allowing the extra or the difference at 100%, because that would be a good selling point for you guys.
Yep.
Yeah, that'd be really good too. That could help more buyers come onto the market and not be so scared.
I mean, and if you guys need help navigating it, I'll be happy to help you guys. You just let me. Me, I do mortgages 24/7. It never stops. But yeah, that was it. That's all we had. And we missed last month. It was a hectic, crazy month. We will continue to move forward. I think the next one, we're going to talk about the difference between non-QM and a hard money loan. And then what's happening with these condos, right? The non-warrantable condos. I know we keep trying to throw them, Francis, and we can't win that battle.
No, not yet. Still on the market. Not doing anything.
Well, they can assume the loan. If your client has a loan, you should ask them, oh, well, what kind of loan do you have? What is your monthly mortgage? We could advertise it if it's assumable. You could speak to the servicer.
But actually, we have qualified buyers. It's just that the HOA and the insurance is what's killing the deal.
But if it's already existing, then maybe you don't have to get you'll have to get your own policy, right? Your homeowner's policy. But they already have a loan. It's already existing. So you're not having to get loan approval.
But they can't get the insurance because the building, the replacement cost in the building is $90 million, but it's only insured for $20 million. That's the problem.
So what's happening to the existing owners? They're not calling their note to do unpayable in full, are they?
No. Yeah.
Why can't the buyer assume the loan? Yeah. And then your client could just get paid out the equity.
And they already have insurance.
Yeah, if we can find somebody that can
yeah, talk to your client about it, talk to the servicer, and then see what the steps are if a buyer did present an offer and wanted to assume the loan. And then you could advertise it as such too and attract more clients or possible buyers.
And I know you guys were working with Sue on the insurance part of that. Maybe you can reach out to Sue and say, hey, what if they assume the loan? Could they still attain the insurance?
Which property is this that has been sitting on the market?
Palm Court in Everbeach.
Oh, Palm Court, yeah.
So there's several on the market. I don't think it's. Then our other one is Franklin Towers in Salt Lake, and that one isn't doing anything but somebody, a buyer came and lowered the price by $40,000, and they got in.
Wow.
Yeah.
Is it an all cash? So they're going to have to navigate through all of the challenges. And if they're not savvy to condo financing, that it's going to be tough.
Isn't that, how do I say, duty to just all of that?
Why wouldn't you? You're just wasting your time if you're not. Yeah,
Mhm.
like let's make it, easier for everyone to make it.
We're talking about loans. I was thought are conventional loans are they assumable?
Are assumable. Yeah. We sent a little cheat sheet email, so take a look at it and.
Okay.
But I think all loans are assumable. It depends on the lender. But everybody has basic requirements. Like if you were to try for a regular loan, they want you to have decent income. You may be allowed to be a little assuming a loan. So I can tell there's Condo, FHA, BA loan.
Okay.
I think it just matters if the servicer is going to put in all that work. They get paid if they
Nobody
so
gets
just
paid.
doing all this work for nothing.
And, that's why sometimes it's hard to gauge, assuming someone's loan. Because the banks aren't in a big hurry.
Yeah. Mm-hmm.
So you may get some reasons on it. But if you can get it done, and it's worth it.
Yeah.
Imagine if you can do that for you're going to be talking you up to all their friends and family. And you're going to be able
I mean, if these properties are not selling, then these sellers need to just kind of think of other options, really.
This is a good option. I mean,
Yeah.
It's not going to affect them, adversely, because if their liability is going to be released, then why wouldn't they do it? It's going to give them another avenue to getting it sold.
Yeah,
and you
they
guys are
still
not
get
the
their
only
equity,
one.
yeah.
Well, and I hear that a lot of people are trying to unload their condos because they don't know what's going to happen next year. I keep
Inventory has gone up. Exactly.
on condos because they're scared of, all the maintenance fees and everything else going up this next year.
Exactly.
I've heard that from about 4 or 5 different realtors.
But even though we think ours is bad, is not good, California, what's going on in California is even worse.
Oh,
Really,
for sure.
what's going on with California?
They can't get any.
It's gone up like quadruple. And
400%.
California real estate is really hard to begin with. It's you can't do a rental there. But you can't kick the people. I mean, the tenants can do whatever they want with the people. Once they
Oh, really? So it's more
and
tenant
you
friendly.
cannot-
I rented a property for 26 years in California. Never had a problem until I was ready to sell it. Then she gave me hell.
Oh.
She's like, wait, you can't do that. Like, I have rights. And I'm like, you've always had rights. But now it was crazy because now once we were like, okay, we're going to have to start an eviction process with you. The same renter for 26 years. We started the eviction process on her. Daughter came in and said, well, I live here too. We had to start the eviction process with her.
Oh, gosh.
And then the boyfriend, it was me. I was like, listen, I'll show you where I come from, but we can strong arm you in getting this done, or we can do it the right way. So it's up to you. So like, okay, fine, we're moving out. And I was like, perfect. They told me the day they were moving out.
Lucky.
Yeah, I was really lucky because I showed up that day changing the locks. I was like, don't mind me. You have the last load. I'm going to go ahead and change the lock. Yeah, California is crazy because all of the rights are for the tenant, not the landlord. They have a lot of nonprofits showing you how to protect yourself. But Bisette, you're right, Francis. Like, nobody can get insurance. All the insurance companies are billing out California. Handful. I just did a closing. I went through 3 different.
I think there's only three companies
is.
in California.
Yeah.
Mhm.
There's 3 left. So what do you think is going to happen with that insurance? Those insurance companies are going to say, yeah, we'll insure you, but it's going to cost you a whole lot more.
Yeah, they have a monopoly on it now.
There's something we can do, but there isn't. Not just condos in California, it's single family residence as well.
Yep.
Yeah.
Mhm.
So yeah, I'm sure that struggle is real for everybody. We can find a way around it, just getting these, non-warrantable condos done.
Story that started in California, it's going to hit us next. We got to can for our owners.
If you guys, if you think that you want to just see if it'll go through, we can say, here's what we have. Let's put the whole contract through and see if it gets approved and see what the kind of conditions we would get back. We haven't had a chance to get any conditions back because we haven't submitted it all the way through. It would be interesting to see because I know one of our non-QM said that they don't even care if we have the hurricane insurance. They're like, it's not necessary. We don't care if you have it or not.
In what state? Because in Hawaii, it's required.
It's Hawaii. So I think there's a condo that we were looking at from one of the realtors and they didn't have hurricane insurance. So I sent the question like, hey, what if they don't have hurricane insurance? They're like, we don't care. It's not a requirement. I was like, okay.
Yes, it is.
Yeah, it's for the lender, it's not a requirement. And maybe for the state it is, right?
As long as you have a mortgage. If you don't have a mortgage, then it's optional.
Right. Yeah. They even showed me the guideline in writing that it wasn't required. It was for Hawaii. Yeah. Anyways, yeah. If you guys have any other questions on assumptions or anything else I can help you with, I would be more than happy to help you guys. You guys always know I'm here for you guys. Emails, phone calls. Sometimes it takes me a day or two to get back on everything, but I'll get back to you.
Thank you.
Thank you, Myrna.
All right,
We're going to see you soon, right? Aren't you going to be in town?
Yes, I am. I'm. This month was super busy for me, and I'm doing Vegas this weekend with Joyce and Jackie. But then we're gonna head over in November.
All right.
Yeah,
let's
I was
see
trying to
then.
get there this month, but I'm not gonna be able to swing it. Did you miss me already?
Yes, yes.
You know what we need to do is we just need to do like a happy hour for everyone, and you know, let me treat you guys to a happy
You
hour.
should. That's a
Yeah,
great
we should.
idea.
Yeah, we do that here I do it here with my realtors in Colorado and California, but I haven't had a chance to do it with you guys. So maybe we can do a happy hour. What do you
We'll
think,
do a
Jennifer?
giving happy hour, and then we'll have like we'll have cranberries and
Yes. Turkey.
what is
Stuffing.
one, like a bunch of like cocktails that are Christmas themed or Thanksgiving themed.
I don't know what they are, but we could do the whole get up. Yeah, that would be great. I'm gonna be there for
Make
Thanksgiving.
it super fancy. Not super fancy, but the drinks fancy that is. So we don't have to deal. I'll just, just glasses of wine. We can make cocktails, like fun holiday cocktails.
Yeah, let's plan it. Maybe we could do it around not exactly Thanksgiving, but maybe the weekend before.
Yeah, like around that time. That'd be cool.
Okay. Chris says we're gonna have to find a venue for it. We have one.
Jackie's house. Jackie's house. Yeah, that sounds good. Let me know when you buy your tickets then. So then I can come up with fun cocktails, and then we can send out the invitations to the agents, and then we'll just
Okay.
tell Jackie, ask her that this is what we're doing.
Oh, for sure. We'll be like, okay, just so you know,
Yeah, just so you know, we're coming over.
we're doing a holiday party. That's what
Yeah.
we're doing.
Yeah, exactly.
Okay, sounds good. And I don't mind cooking. I love cooking.
And I love getting
nice.
your cooking, so.
All right, it's done. All right, good idea, Francis.
All right, thanks. Thank you.
All right, we'll see you guys.